ETF is so overbought that it's flashing a warning sign Wall Street hasn't seen in last 2 years. RSI at 77, the highest reading in 2 years. While everyone watching oil price and AI stocks, one corner of the market just flashed a warning sign and almost nobody's talking about. So let's break it down. What's a quiet record run would be the first part of discussion. While attention's been on tech and oil, financial stocks have been on a stealth run. The SPDR, S&P Insurance ETF, ticker KIE, is up more than 7% this year and just hit a record high, alongside its cousin, the Invesco KBW Bank ETF. Bank of America, US Bancroft, and BNY Mellon just touched 52-week high. And on the insurance side, Cub, Travelers, Afalc, MetLife, Allstate are doing this same. Meanwhile, the broader financial select sector ETF, XLF, is up by 3% this year, trailing the wider market but still climbing steadily. Sounds like good news, but here's the catch. What's a warning sign would be the second part of discussion over here. Traders use something called the RSI Relative Strength Index to measure how stretched the stock or fund's recent move has been. Think of it as a speedometer of buying pressure. Above 70 means that it's overbought, possibly due for a pullback. Below 30 means that it's oversold, possibly due for a bounce. And right now, XLF RSI has climbed to 77, its highest since level July 2024. That doesn't mean that a crash is coming. RSI isn't a crystal ball, but it is a signal that buying has gotten stretched and possibly ahead of what the fundamentals actually support. And the next part of discussion is why is this happening? So it's isn't a random call. Analysts are calling it rotation. As AI and the chip stocks got overstretched, expectations running ahead of fundamentals, money quietly moved into steadier sectors and financials, healthcare and insurance boom. One director of research put it very simply that expectations are up, fundamentals are struggling to meet those sky high demands that's fueling the shift. So it can be called as a classic pattern when one part of the matter runs toward capital rotates into what looks cheap or safe by comparisons until that gets stretched very long. So the financial part of our discussion is that this isn't a signal to panic to sell the financials. It's a signal to know what you own. If you hold index funds or a 400k, that's a good chance you exposure to the sector without realizing it. And after a run like this, a cool down or sideways stretch wouldn't be surprising. So the takeoff isn't get out. It's don't be surprised if the pace of gains slows down from here. So RSI at 77, highest in 2 years, that conclude that banks and insurers are at record high. Money quietly rooting out of AI into safe zone. And Wall Street rarely rings a bell before a shift. But signals like this are close as it gets. So it would be advisable to subscribe this channel so don't miss in the future. Share it with your friends, family, colleagues to make sure to like the video. And welcome to Money Brief.